All right. Hey, Blake, how you doing? All right. It's on the road. Again, this weekend, we try to highlight in the big picture the bullish wedge that we see forming in the broad market and a lot of the major sectors as well. Again, I have this, visual drawing drawn out, pretty much the same as we had shown in the big picture. Again, we can see the same pattern forming in the Qs. Again, it's not drawn out here, but you can see visually it's, an uptrend. And now we're starting to trend the same as we were doing in the SPY. Same thing we can see in the Dow 30 names. Same thing we see in the tech sector. Same thing we see in consumer discretionaries. Same thing we see in, telecom and as long as industrial. So we're seeing the same pattern across the major markets, across most of the major sectors, except for maybe energy. Again, energy, has been breaking out. It's very close to retesting its all-time highs. So that's, one of the outliers. And then you have the weaker sectors like the REITs and utilities that have been getting, pretty beaten up. But for the most part, we're seeing an overall, bullish wedge forming in most of the sectors. And that's just, we need to expect some consolidation. We should expect some similar price action to kind of how this pattern has been drawn out. Again, it's not going to be perfect to this, way it's been drawn, but some expectation of just, some smaller ranges for the time being until we can, continue this breakout, hopefully to see new highs. But we want to, if we want a couple, individual names. So Riley has been setting up, it looks like it, probably wants to go today as it closed, bullish engulfing on Friday, right under that breakout level of 960. So this is definitely one to keep on the radar. Probably keep a low a day stop if this is going to trigger off the open. But again, we don't want to chase the Monday morning gap up. So if it does go right off the open, we could wait and just wait for it to set up more properly. But definitely a good chart to keep on the radar. This INCY, again, still basing, so nothing to do just yet. Just have those alerts set around that 66 level. LYB, setting up through 100 or through 101. Again, this is not a blue sky breakout. If we zoom out, you can see that, it's kind of in the middle of its overall range that the name's been trading in for the past few years, but still a nice, bull flag breakout that's, setting up here for the past, pretty much last better part of the year. We have this SAIA through 440. This is a blue sky breakout. It's all-time highs. Has had 3 or 4 attempts at this level versus 420 for now, so about 5% risk. So just buying through all-time highs. Again, very strong name, and it's been consolidating for a few months up here now. We have this SNPS, another blue sky breakout. Again, just focusing on the strongest charts that are out there. This SNPS tech name through 469, 470 versus 450. This might need a little bit more time. Again, it is gapping up pre-market, as most names are. This Monday morning gap up. So not the entry we want to see right off the open, but in the next, throughout the week or next week, this could be, a nice setup. And then lastly, on my radar, we have this VMW through 170. It's earning flag that's been forming, for the better part of September. And we can see this level goes back, quite a ways back to 2021, even further. And we can see how long that this level has been acting as resistance for VMW. And now it's finally getting, much tighter. We can see in the past, it hit 170, would, drop down into the 80s, hits 170, drops into the hundreds, hits 170 this most recent time, pulls back to 150. So we're starting to see the buyers really stepping up here, where in the past, they just would kind of fall off a cliff, where this last attempt, it wasn't able to drop as much. And now even more recent, it's been even much more tighter. So, a couple strong bull flags that have been forming to keep an eye on. I know Shake had a bunch that he had mentioned in the shakedown. So we'll kind of skim through a couple of those. And again, if you guys, Fred or Blake or Nathan, you guys have any ideas, you can post them in the chat here. We'll go over them as well. So I know Shake's keeping on this ADSK through this 220 area. Yeah, you can definitely see the level is forming there. You can almost see a much broader wedge that's been forming as well. I just have the horizontal line of resistance drawn. We can see the pattern that's been forming. looks very good. This IoT, again, super extended on the daily, nearly 50% this month. But when you zoom out, this is these IPO high setups. These are, when it comes to recent issues, this is our highest probability of a trade of taking that name through the IPO high after it's been a year or two setting up. We want to avoid it that first year or two when it just kind of gets beaten down, which it already has done that. But through those highs, typically we can find a good setup. But for now, it's just wildly too extended. It just needs to really consolidate. Maybe retrace half of this move, but one to keep on the radar. Moving on with this SMCI, again, gapping up pretty much right through the level. I know Shake was keeping an eye on, so it's probably a pass for today since it's past the level. We have this STLD. You can see a very clear stage one base. You can see this like 110 is the, entry through the base break, but you can probably find a support buyback if it shakes out down through 100 the next couple of days. We have this tap, keeping on that 64, but again, pre-market, it's pretty much at that level. We're not trying to chase any of these pre-market gap ups. PLTR still sitting up to this 16, so it looks very good. We have this ATHM, Auto Home. Again, another very defined base that's forming, whether you're looking to buy through this 30 quarter, through 32 or 34. A lot of entries in this, base that's been developing for almost, 2 years now. It's definitely one you don't want to miss when it does finally go. Seems like maybe 32 is probably the better entry, so you're not, getting in too soon. But definitely a phenomenal base here versus 28. This is J&J. We have this support buyback that has been forming for a little bit of time now versus this 157. But again, kind of pre-market rate at that entry you'd be looking for to that 161 area. Caterpillar, Dow 30 name flagging at all-time highs. Might need a little bit more time to develop, but top right, all-time high name, looks great. Venture through these, 290, 286 area, definitely looks, very strong. This Tesla through this 260, but again, already gapping up above that. Seems like that trade is kind of taken away. The stop versus 240 for now. We got last couple of names with this AMD. Kind of been off the radar for us for a little bit of time now, but through that 110, kind of have this downtrend break or this, wedge break we're talking about earlier with the major sectors. Definitely looks pretty good. Let's see. I know trade of the week, we got DBX, again, gapping up too much, but through this 2850 area. Looks pretty good. Now blue skies. And last but not least, trade of the week for Shake is his RCL through 100. It is gapping up a little bit today, but nowhere near the breakout entry through that 100 level. This RCL, this Royal Caribbean Cruise, you have that little kind of support buyback through 100 versus this 96 for now. You probably get that initial move to retest this 113, and you have that bigger flag that'll form to continue to push higher. So definitely some good charts there. Again, the overall theme is this bullish wedge that's been forming in most of the major markets and major sectors, which is a good sign in the medium term. In the short term, we shouldn't expect any crazy breakout. We should expect, range contraction, but doesn't mean that there still isn't, plenty of charts out there to take advantage of in the short term. So let's see. Fred's looking at THCX. Let's see. So again, the weed trade, in my opinion, is just kind of, it's been dead. If you look at this, really zooming out on this ETF, this thing is dead as can be. When it comes to a chart, ETF or not, once a name is down more than 90% off its highs, and this is just the weed sector, this is the bubble of weed when weed was going to take over the world and, become anything other than just another consumer good that's now legal. Once that trade is over, it's very hard for it to come back. Again, they split the stock. This is a bad sign when you have a stock near lows when you're splitting it. That's when they're trying to prop the stock up to make it look more appealing than it is. So this is a bad sign. When you split a stock, like when Apple does it or Tesla does it when they're at all-time highs, they're making the stock appear cheaper. or the ETF appear cheaper. That's, again, it's more of a marketing gimmick, but it's a decent sign because the stock has appreciated so much. When you're splitting a stock near lows, the stock is so cheap, they're trying to make it look better. So that is a bad sign. And more so when a stock or ETF is more than 70% off its all-time highs, very rarely is that name going to come back anytime in the future. This name, the all-time high is 300. It's more than 90% off highs. Even if you took away this bubble and just said it kind of traded in this 200 range, it's still 90% off highs. So, weed is just like when weed in general is just a consumer product now. It's like when you walk into a 7-Eleven, it's like buying a Snapple or Coca-Cola. It's not as, sought after when it was illegal. So I think that trade is just more obvious now, but I don't think trying to buy this ETF, when it's been hitting all, 52-week lows for the last year and a half, this is probably not the time to look into it. I think this is just a pass. And let's see what Toke. Okay, another ETF. Same thing. And this thing's basically a penny stock. So if I had to buy the two, I would probably focus more on THCX, but this name is dead. I don't know what the news was, so I can't speak on whatever the news was last week. But this is a hard pass. We talked about the recent IPOs. This is just an ETF, but you want to buy this, buy through 26. Buying this at 6, you're going to watch it go to 4. You're going to watch maybe go to 7 or 8. And you're not going to stick with this for the net. I'm not saying you specifically, but most people are not going to stick with this for the next 5 or 6 years or 7 years for it to get back to 26. And that's like best case scenario, where these just seem like passes. If you compare this to the market, broad index, if you bought the SPY, let's just compare it really quick. So if you bought weed since its inception, you're down 91%. Had you bought the index, you're at 50%. Much easier to just buy the broad index than to try to pick, this sector that's so beaten down. So for me, these are hard passes. If you want to tell me what the news was, but I don't think it's going to make much of a difference when you look at what has transpired for the last, 3+ years. It's just been a perpetual downtrend. And whatever that news is, it's not going to move the needle much where it's going to move it anywhere, close to where it has been. So hope that keeps you out of it. But all right, guys, I think that kind of wraps it up. Market opens in a couple of minutes. So folks, in your top ideas for the week ahead. Again, any questions you have, let myself or Sheikh know, and we're always here to help. All right, guys, you guys have a good week.